So, how does a company go from losing over $1 million to making almost 1.5 million in just 1 year? Well, that's the story of Jadason Enterprises. And today, we're going to dig into exactly how they pulled off this incredible turnaround in fiscal year 2025. All right, let's just jump right to the headline number, the one that tells the whole story. 1.4 million Singapore dollars. That's the profit Jadason booked for FY 2025. Now, to really get why that number is such a big deal, you've got to see where they were just 12 months earlier. I mean, just look at this. A $1.4 million profit, right after a $1.1 million loss. That's a $2.5 million swing from deep in the red to solidly in the black in a single year. So you have to be asking, how in the world did they do it? Okay, so here's how we're going to break it all down. First, we'll really look at the scale of this turnaround. Then we'll get into what actually drove that profit. After that, we'll do a quick financial health check. And finally, we'll look at the road ahead. All right, first up, Jadason's big turnaround. Going from $1 million loss to $1 million profit, that's huge. This wasn't just a matter of tightening the belts a little bit. Nope, this was a major shift. So what exactly did they do to make it happen? And that brings us right to our next section, what powered this comeback? When you dig into their financials, the story really comes down to two things. One, they sold more of their main product. And two, they managed to slash one particular expense in a really big way. So first, let's just quickly get a handle on what Jadason actually does. As you can see here, their business is really dominated by one thing. Almost 90% of their money comes from selling equipment and supplies. Specifically for the printed circuit board industry, PCBs, that's their bread and butter for sure. And that core business, it was absolutely the engine that drove this whole turnaround. Revenue from that segment shot up by more than 17%. It climbed all the way to almost $26 million. And the company says this was all thanks to stronger sales in their biggest markets, Singapore and China. But, growing sales was only half the equation. The other piece of the puzzle, and this part is kinda wild, was on the expense side of things. There's this one line item they call other expenses, and it dropped by an incredible 97.6%. So what happened? Well, it turns out the year before they had this huge one-time cost, a write-down on the value of their equipment. By simply not having that huge hit again in 2025, their profit got a massive, massive boost. Okay, so making a profit is great news, right? But does it mean the company is actually healthier? Is its foundation stronger? That's what we're going to check out next. Let's do a little financial health check and look at their balance sheet. First thing you look at is cash, and they ended the year with $4.7 million sitting in the bank. That's a really solid cushion to have. And check this out. This might be even more impressive. 0. That's the amount of bank debt they have. They paid it all off this year. Being completely debt-free, that gives a company a ton of flexibility. So when you put all that together, what does it mean? It means the company's net worth, what we call shareholders' equity, got stronger. It actually grew by $1 million to $428 million. So that profit we talked about, it went straight to making the company's financial foundation more solid. Okay, so they're making money again, their balance sheet looks good, they have no bank debt. Sounds pretty perfect, right? Well, let's just peel back one more layer and see. It's not quite perfect, but the reason why is actually pretty interesting. If you look at their cash flow from just running the business day to day, it was actually negative. And you might think, wait, that's bad. But here's why. They made a conscious decision to use $2.2 million to pay down what they owed their suppliers. So yeah, it uses up cash in the short term, but it's a really smart move for the long run. Keeps your suppliers happy and your supply chain strong. All right, so they've got this great turnaround story behind them. Let's move on to our last section and look forward. What's on the horizon for Jadason? What are the risks and, maybe more importantly, the opportunities? So the company itself is pretty upfront about the challenges, the headwinds they're facing. You've got general economic uncertainty around the world, ongoing trade tensions, and the possibility of new tariffs. For a company that relies on manufacturing and selling things internationally, these are big risks that are pretty much out of their hands. But they're not just sitting back and hoping for the best. They're trying to create their own tailwinds. And this is a big one. Right after the year ended, Jadason went out and bought 2 tech companies. This looks like a huge strategic shift, moving away from being just a PCB company and pivoting toward a massive growth area, artificial intelligence. And this quote right from their report really spells it out. They say they see growing opportunities to help customers with AI-driven digital transformation. This isn't just them dipping a toe in the water. This sounds like they're declaring a whole new strategy for how they're going to grow in the future.
So, where does that leave us? Jadason pulled off a fantastic turnaround. They've got a much stronger balance sheet, and now they're making a big, bold move into AI. The million-dollar question now is, can they catch this AI wave and ride it into their next chapter of growth?
And just before we go, a quick reminder, this content is intended to serve strictly and only as an informational, independent, objective summary of recent events. It should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.